Spur Corporation's first half diluted headline earnings per share surged 35% to 89.9 cents per share. Revenue increased by 40% to 332 million rand. Dividend per share is up 37.5% to 55 cents. The group's international expansions will include second Spur restaurants in Tanzania, Nigeria and Swaziland, as well as Derego's outlet in Namibia as well. And joining us on the line now is Pierre Van Tonder. He's the CEO of Spur. Thanks so much, Pierre, for joining us this afternoon. While you're still managing to pull the spend from the cash-strapped consumer that has to dig deeper into his or her pocket, your assessment of the 6-month period gone by?
Good afternoon, Alicia. Thank you. Yes, it's been a very good 6 months for us. As you rightfully point out, the consumer out there is experiencing difficult sort of cash flow times. But again, I think it's the basic principle of the added value, the aggressive marketing campaign, and excellent operations by our franchisees in terms of delivering product across all 4 brands.
Take us through some of your strategy here, because in your earnings report you highlight specifically a promotion strategy, increasing customer loyalty as well, and there's some of the initiatives that's allowing you to see these kind of numbers filter through today.
If you, we launched the breakfast in Spur approximately a year to a year and a half ago. The continuation of the investment from a marketing perspective and the commitment by franchisees has again proved to be a very successful platform for Spur, as well as the Thursday evenings and obviously the family card. From the Panarottis perspective, the continuation investment with the radio station has also brought great value to the brand. And as well as the weekday promotions, again, has driven foot traffic into Panarottis, and we're really excited about the Panarottis result. It's been a long, hard battle to get the market share to where we've got it to now. As far as the Derego's are still in the infancy of our purchase of this brand, but again, it's also shown good resilience in these tough trading times. And John Dory's is starting to claw a little bit back in its market share and its growth opportunities going forward.
How tough a feat is this though, Pierre? Because looking at the market that you're catering to, it's a family sit-down restaurant market, and you've got strong competition coming through from the fast food side of things, where convenience is what the consumer is after at the end of the day.
We all, it's, as I would call it, it's for the fight or share of stomach, as we will call it. Whether you're in the QSR or the casual dining sector, it's all driven by value, it's all driven by convenience and by customer service. So the QSR guys have definitely made inroads into that fight of stomach, as we call it. But I think at the end of the day, it's in terms of how you deliver your product, how you deliver your brand, the commitment of franchisees, and the ongoing commitment in investment in marketing and innovation.
And at the price you deliver all of that to the customer at. So let's take a look at that and the kind of pricing power you still have in your grasp.
Well, I think, again, I've said it's the restaurant industry in South Africa. I think we're in a fortunate position because it's a growing market, not a shrinking market, from a population point of view and an economic point of view, although cash flow-wise it's tight. So whilst the competition in itself is very, very, very competitive out there, I think, again, from a consumer point of view, that it's a growing market there for all the brands to trade in South Africa.
Growing here in South Africa, you've also got quite a focus, like many other companies in Africa as well. When it comes to your international operations, though, what's interesting is that we've had Spur bucking the trend in the UK, coming through positive there, despite the depressed market that you're catering to. We saw a bit of a static performance being put on by operations in Australia. What's your view on those international operations and where you're headed?
I think again we're elated with the UK because we've invested substantially in that market over the last few years. We now own all the restaurants in the UK, and what we've managed to achieve in terms of again, we've invested human capital on a permanent basis into the UK, which is again delivered in terms of operational platform to the consumer. So we've seen a definite improvement in our day-to-day operations in the UK, which has impacted the top revenue line in terms of frequency. So from a UK perspective, we obviously have taken a bit of a hammering in the past, but not that we're smiling at the moment, but we're showing some positive results in the UK. As far as the Australian economy is concerned, it's been flat. Again, if you look at Western Australia, for instance, which is probably driven by commodity prices, there's been a definite upswing in the store in Perth. But as for New South Wales and so forth, again, the economy there is very, very tight, and it's a very difficult trading area.